Hello and welcome to Zee Commodity Capsule. Most of the global commodities are trading in a very tight range, but with a slightly better, or you can say stronger bias. Let's start with Brent crude prices, which have managed to trim losses from the 2-day decline, and it has managed to rise by nearly 0.5 to 0.7%, with Brent crude trading nearly above $69 a barrel. Traders are squarely focused on improving demand signals from the United States and China. Strong summer travel demand, rising US gasoline consumption continues to support the outlook, while China's second quarter growth exceeded the expectations, easing some concerns over its energy demand despite tariff-related headwinds. Having said so, OPEC Plus's latest report projected a stronger global economy in the second half of the year, that is the year 2025, with rising oil demand driven by growth in India, China, Brazil, along with continued recovery in the United States and EU. Gold prices meanwhile have managed to edge higher but continue to trade in a broader range near $33, $40, $50 an ounce as investors digested the economic data showing an increase in the US consumer prices last month. Now the market awaits clarity on US President Donald Trump's trade policy. We have seen US consumer prices rising in June by most in 5 months amid higher costs of some goods, suggesting that tariffs were starting to have an impact on inflation and potentially keeping the Federal Reserve on the sidelines until the month of September. Meanwhile, we have seen that you can say half-yearly report was released by World Gold Council, wherein they mentioned that gold closed out the first half of the year rising nearly 26% over the period, that is between January to June 2025. But another interesting fact was that it reported 26 new all-time highs in the first half of 2025 versus 40 new all-time highs for the entire year of 2024. So clearly this year has seen more upside and maximum number of gains as compared with the previous year. Meanwhile, we have seen Citi revised its silver price outlook for up till 3 months to $40 an ounce. And let me remind you, silver prices might have declined a bit, but they continue to trade near 14-year high as far as COMEX prices are concerned. Copper prices on LME moved a little on Wednesday as markets await the impact of US President Donald Trump's trade tariff, which are set to take effect on August 1st. Copper on LME eased near $96.40 a metric ton. Goldman Sachs meanwhile expects LME copper prices to fall modestly to a low of $95.50 a metric ton in August from $10,050 a metric ton. And last but not the least, Malaysian palm oil, the prices have surged close to 4,200 Malaysian ringgit per ton, largely recovering from a steep 2% drop in the previous trading session. The rebound is largely supported by weaker ringgit and gains in the rival Chicago soya oil. We have seen that the Malaysian palm oil shipment during the first half of July fell between 5.5% and 6.2%. Malaysian data shows that the end June inventory has risen by 2.5%. At the same time, market outlook remains slightly clouded by uncertainty over potential US tariff and ongoing weather-related risk.